Welcome to Canadian Justice. I'm Christine Van Gyn, and today we're discussing cryptocurrency and crypto scams and how to identify them and what to do if you suspect a scam. The rise of cryptocurrencies like Bitcoin, Ethereum, and even non-fungible tokens has created an exciting opportunity for investors and for fraudsters. The decentralized nature of these digital assets makes enforcement of traditional security laws hard, if not impossible, and this is to the benefit of criminals. There are a variety of different types of cryptocurrency scams that investors should be aware of, from pump and dump schemes to phishing, hacking, pyramid schemes, and cloud mining scams. And we're going to talk about what investors need to know and what legal and enforcement gaps exist. We're joined for this conversation by three experts: Gavin Brown, Associate Professor of Financial Technology from the University of Liverpool; Matt Burgoyne, lawyer and head of cryptocurrency and blockchain group at the McLeod Law Firm; and Chantal McMillan from the Canadian Anti-Fraud Centre. Thank you all so much for joining me today. Chantal, I'll start with you. What are some of the different types of scams that people might see with cryptocurrencies?
Right now, we're seeing multiple different scams with cryptocurrencies. In fact, it's one of our top payment methods that we've seen in 2021 and also in 2020. We'll see scams ranging from job scams, romance scams, extortion scams, and what we're discussing today, which is investment scams.
So Gavin, one of the investment scams that I identified in the opening here is a crypto pump and dump. So can you explain for our viewers what that would look like?
Yeah, sure. So that's something that's not new to cryptocurrency, actually, something that's existed in the equity capital markets for as long as the equity capital markets have existed, really. And this is the idea that people effectively talk up the merits of a given token or coin in the hope that it will drive euphoria, it will drive a herd mentality where people will begin to buy it up. The action of doing that demand pressure will cause the price to surge. And when the person who originated that kind of pump and dump scheme or rumor is happy that the price is high enough, they will then sell or dump their stock and make a significant gain as a result. So it's deliberate market manipulation. It's the kind of thing that's not legal in the normal equity capital markets, and obviously is even harder to sort of police in the cryptocurrency markets.
Yeah, so Matt, as Gavin said, that this isn't new. Pump and dump isn't a new trick. Securities regulators have long gone after pump and dump schemes on the markets. But is there any ability to regulate pump and dump schemes in the crypto world?
There's a rule in securities law, generally speaking, that issuers who are selling securities can't make misrepresentations or can't make untrue statements and sell securities and rely on those misrepresentations. So there's some, general registration requirements in securities law, and then some what's called the Prospectus Requirement. And so the rules in securities law are supposed to compel issuers to disclose true statements and provide material disclosure. And so that's with a pump and dump, you're making untrue statements, or you're relaying falsehoods that people are relying on to their detriment. So the whole idea is the capital markets are policed so that issuers make true statements, and investors are able to rely on those true statements and not lose money through a scam.
So Gavin, are we seeing this scheme of pump and dump in particular? Are less common coins more susceptible to fraud? I know I mentioned Bitcoin and Ethereum, but there are all kinds of coins that I have never heard of. Are those more susceptible than the more major coins? And I know that there are wholly unregulated crypto exchanges where those less common coins are used.
Yeah, I think that's a fair statement to say that. And this is something that a company called Chainalysis do a lot of research on. They're probably the world leading company in terms of data analytics in this space. The actual assets themselves are often unregulated, but the activities around them in terms of how they're dealt with, how they're promoted, how they're sold, that activity tends to be regulated in most jurisdictions. What you tend to see, though, is that there are over 14,000 cryptocurrencies with a positive market value at the moment, which means that there's there's way too many than there should be or there needs to be, would be the argument. And what you tend to see is that those kind of top 20, maybe even top 50 cryptocurrencies will often have a credible business case, a credible USP, a credible reason for existing.
Gavin, we've got to go to commercial, but I want to let you finish when we come back.
Okay, sure. Thank you.
Welcome back to Canadian Justice, where we're discussing cryptocurrency and fraud. Now, Gavin, I had to cut you off in the last segment. We were talking about whether unregulated markets for cryptocurrencies or less common coins are more susceptible to fraud. And I wanted to let you finish what you were saying.
Yeah, sure. No problem. So the answer in summary, I guess, is yes. Any coin which is not part of the sort of elite, maybe top 50, if you like, is not necessarily fraudulent or non-fraudulent in essence, but it does mean that it's perhaps more susceptible. Maybe it's a case that its business model or its reason for existing is not yet proven, and therefore, all things being equal, is maybe more probable to be prone to fraud or fraud-like scams than others.
So on these less common coins, we're seeing even more new ones emerge. Matt, there are new types of pseudo cryptocurrencies, tokens that are designed for the metaverse. I've heard of one called Mana, one called Sand, and these are for the new digital reality world of the metaverse, where you can use these tokens in the virtual stores there. I hope my viewers are following this. This is all new stuff for me. I have to learn a lot to even ask this question. But Matt, what type of risk of fraud is there for current cryptocurrencies like that and with the metaverse in general?
Yeah, that's a good question. So the types of tokens that you mentioned, Mana in particular, is used to, as you said, it's transact and to do business in the metaverse, in a virtual world, where you can buy goods and services with tokens and reward content creators. I guess the risk is sometimes those coins aren't very liquid. There's not a lot of opportunity to sell them for Canadian dollars, or worse, you deposit Canadian dollars in exchange for these tokens. And the creators scoop up the fiat, the national currency, from the pool, and you're left with a worthless token, Mana token, that has effectively no value, that you can't really sell. So like Gavin said, I mean, the top 50 or 20 top volume traded cryptocurrencies are for the most part going to be safer than some of the other less traded coins.
So Chantal, one of the ways that I have seen crypto scammers, or who I suspect are crypto scammers, is on Facebook. Especially if I'm reading an article on cryptocurrency, I will look at the comments under the article, and there are literally hundreds of comments along the lines of, "Thank you to my crypto broker so-and-so who made me so rich." And they'll tag some individual who has what looks like a fake investment profile on Facebook. What is going on here, and what do people need to be aware of?
Yeah, so unfortunately, social media has always been used as a primary method to solicit victims for all kinds of scams. So what they're doing here is creating false accounts, so social media accounts, to solicit victims. And what they're doing is commenting on their own social media profiles to elicit some sort of respect into the investment. So typically it's their own comments to elicit some sort of reaction from other buyers to get interest. And we're not only seeing it on the main social media platforms, we're also seeing it through actually dating sites right now. So we're having people reporting that they're on a dating app, they're getting trust through the person that they met. And then these people that they meet on a dating app are saying, "Hey, have you ever thought of investing in cryptocurrency?" And what we're seeing right now is they're actually telling them to invest in the top cryptocurrencies, so Ethereum and Bitcoin and Litecoin. So, and then because criminals are very good at mixing coin, they'll then mix it to the pseudo coins or the other coins at the end, into some of the coins that victims aren't as well versed in. So it's a lot of social engineering on our end with the scams and fraud. And those social media accounts that you're talking about, it is a lot of social engineering. And I would suggest just ignoring it and deleting the DMs if you're getting them asking you to invest in cryptocurrency. I know I get at least one a week on Instagram. So, yeah.
Chantal, we've only got about 30 seconds. What can you tell me about the rates of crypto fraud, crypto scams that you're seeing in Canada? About 30 seconds.
So they're definitely increasing. Cryptocurrency as a payment method, as I mentioned, it's increasing as of 2020 into 2021. It's only increasing. And as far as investments concerned, it has increased into 2021 significantly. I don't have a dollar range for you today. I can get that for you if you'd like.
Welcome back to Canadian Justice, where we're discussing cryptocurrencies and fraud. Matt, I want to ask you a question about what's known as a rug pull scam or pull the rug scam. There are these decentralized finance scams where cryptocurrencies are exchanged directly without gatekeepers, so without a platform. So this has created some opportunities for what's known as the pull the rug scam or rug pull scam. Can you tell me how that works and what people should be aware of?
Sure. So rug pull scams typically happen on decentralized exchange platforms, or DEXs, as they're sometimes called. Decentralized finance has opened up a whole new world for people. You can transact, you can engage in borrowing and lending transactions directly peer-to-peer with no third-party intermediary. But what it's created is an environment that a lot of scammers are taking advantage of. So on a decentralized exchange, there'll be a liquidity pool. And so the scammers will pump up a lesser known token. And they'll, in order to participate and get access to the token, you have to deposit, Ethereum or Bitcoin or Ether or Bitcoin, like a more well-known crypto. And then enough investors do this. And then at that point, when there's enough Ethereum or Bitcoin in the pool, the scammers will pull out the Ethereum or Bitcoin, which effectively drives the price of the lesser known token to zero. So investors are stuck with this worthless token that they can't sell for consideration on the open market.
So sort of like the rug's been pulled out from beneath them, I guess is where
rug's being pulled out. It's a liquidity pool. There are two tokens. The token that's valuable is being pulled out, leaving a worthless token. And it's almost exclusively happening on these DEXs or decentralized exchanges.
So Gavin, I want to ask you about a different type of scam that we've heard about. It's called the cloud mining scam. Can you explain what that is?
Yeah, sure. And I guess the best place to start with that is that the miners themselves are, in the context of cryptocurrencies, are taking the place of banks. So cryptocurrencies are decentralized by nature, which means miners perform verification checks instead of what banks would do in the normal financial system. The action of cryptocurrency mining needs to be done at scale, on a large scale, to make it viable. So what a lot of people will do is enter into cloud mining arrangements where they operate as part of a collective. This particular scam then effectively encourages people to make a down payment. In return for that down payment, they receive the promise of mining rewards, which then fail to materialize. And obviously your down payment is then kept by the person who is supposedly running this community cloud mining activity.
So Chantal, I want to ask you about another thing. We're talking mostly about investment scams here, but one of the ways people kind of get defrauded with cryptocurrency is that they can have their digital wallets holding their digital assets hacked. What can you tell me about these hacking risks and how people might be able to get into a wallet, for example, using phishing?
Phishing emails in general, the goal of them is to get your personal information. And with any phishing email, there's a risk that there's going to be an embedded malware, a Trojan horse, etc. So if that's going to be on your system and you have a wallet on your computer or on your device, so your phone, yes, it is possible that someone could get your private key. Now, when you have a hot wallet, so if it's not a cold storage wallet or a paper wallet, you are going to need to always protect your seed phrase and your private key and never give that to anyone. And also in a lot of these frauds, what the scammers are doing is they're coaching you to download a wallet on your device and they're going to gain remote access. So one of the primary things, if you are trying to get into investing, is never, ever, ever let anyone have remote access to your system to coach into getting a wallet on your system. Never provide your seed phrase to anyone when you're downloading a wallet. That is private information. It's a 12 to 14 word password, and never provide your private key to anyone. So those are very critical things. And obviously get your computer checked and report to as many people as possible if you find yourself in these situations, as well as the Canadian Anti-Fraud Centre and police. Please, it's very important.
Yeah, that's one question. You've only got about 30 seconds, Chantal, but if someone does get hacked, is there any recourse for them to get their assets back?
That's a very interesting question. So again, it's borderless, so funds can be sent very quickly all over the place, right? So if it's unlikely if they're sent out, right? Because cryptocurrency is very difficult to trace. It is extraordinarily difficult to trace. However, if they report it very quickly to local police, it is possible for us to do court orders, production orders. Does not guarantee anything for getting money back.
All right, we've got to go to commercial break, but we will continue this conversation when we come back. Welcome back to Canadian Justice, where we're discussing digital currencies, cryptocurrencies, and frauds. Now, we've been talking a lot about the risks associated with cryptocurrencies. I don't want to spend the whole time talking about why it's dangerous or bad, because there's so much that attracts people to cryptocurrencies. There's so many reasons that people might want to invest. But I want them to be able to invest safely. So, Gavin, can you identify how people can make sure they're making a safe investment? The typical advice is if it's too good to be true, it's probably fake. But that's part of what attracts people to cryptocurrencies, the insanely high returns and volatility. So how do you make a smart investment decision in that environment?
Sure. I think it's important to say that obviously nothing is risk-free. No investment is ever risk-free. If you're looking for, a list of red flags, the Securities and Exchange Commission published historically a Howie coin, which is a honey trap scam, if you like, to educate people on the sorts of things to look out for. So to look at the team who are backing it, look at the USP of the token or cryptocurrency itself. Obviously, you might choose to look at the white paper and also look at expert and critical commentary. Not easy to find in a very clouded space. And we were just remarking before that, often things can move for no reason at all. So there's a cryptocurrency called Omicron, which when the WHO named the most recent variant of COVID, actually did a 900% return in just a matter of days. So that was, a testament to the idea that, this is a very sentiment-led industry, and therefore it can be extremely difficult to find, the quality from the fraud, if you like. But in some ways, that's what attracts people to it, and that's why many people talk about it in the context of gambling in some instances.
So Matt, same question to you. How do people make sure that they're making a safe choice, a safe investment when choosing to invest in cryptocurrencies?
Great question. I would say this: if you're planning to invest in cryptocurrency and you want to make the safest bet possible, in my opinion, buy Bitcoin and buy it from a legitimate cryptocurrency exchange that ideally in Canada that is already registered as a restricted securities dealer. And then once you buy the Bitcoin, take it off the exchange wallet and keep it in your own cold storage wallet, hardware wallet, or wallet on your phone. I think that's probably the safest way to protect yourself and to invest. I guess alternatively, only buy tokens and coins from reputable exchanges. Like there's some really big international exchanges out there that have been operating for number of years. Kraken is one that's been around for a long time and is legit. Binance is one of the largest exchanges in the world. Coinbase, obviously, in the US. So there are a number of platforms out there that have been operating for a while, and you're unlikely to get scammed from those platforms. But like Gavin said, do your own research. look at the team behind the coin. Are they comprised of individuals who just created LinkedIn profiles like 2 weeks ago or a month ago? You can, just have a sense of, are the people behind the project real, and what are they trying to accomplish? Does it make sense? Think like a venture capitalist would think. Is there a business behind this? And make a decision. Make a decision that way.
Chantal, about a minute left. What advice do you have for people who want to invest in cryptocurrencies safely?
I'm going to mimic a lot of what Matt just said. Go with a registered, regulated exchange within your province. A lot of the provincial regulations are different in Canada, depending if your exchange is regulated with the Securities Commission of your province. And remove the money from the exchange wallet into a paper or a cold storage wallet, because then nothing can happen to your finances and they're going to be safe. So that would be my advice as well. And do your own research. Don't go with these people who are claiming to be Elon Musk or some other celebrity saying they'll coach you. Do it on your own.
Well, I want to thank all three of you for coming on today and sharing your expertise. It's a really exciting product. I have a lot of FOMO related to cryptocurrencies, as I'm sure a lot of people do. But I want to thank you so much for sharing your expertise.
Thank you.
Thank you.
We've heard today about the rise of digital currency and the rise of fraud alongside it. Part of the attraction of cryptocurrency is the anonymity, the decentralization, and yes, the volatility. All things that make it extremely appealing to fraudsters. Another problem is that these decentralized digital assets make traditional regulation, the kind we see on securities markets, challenging, if not impossible. Cryptocurrencies have many benefits and can make excellent investment products. But if you're considering them, remember the advice you heard today and do your research. Thanks for watching, and remember, a freer Canada starts with you.